Hi, I'm Krishan Gopaul here with my colleague Louise to talk about the Q3 2025 Gold Demand Trends Report. So Lou, off the back of an incredible quarter, record-breaking, gold up 16% and then in early October breaking through that $4,000 level. What can you tell us that the report shines a light on?
As you say, yet another record-breaking quarter. The gold price rise, it's been rising now for the last couple of years, but that really accelerated in Q3. I think it's the seventh successive quarter that we're talking about new record highs in the price. In a nutshell, the main driver was really strong investment demand. The conditions that we've had in place for strong demand, strong investment over recent quarters are still very much the same. Heightened geopolitical uncertainty, weak US dollar, expectations of lower US interest rates. But then added to that in Q3, we had this sudden eruption of concern over the US Federal Reserve independence. Towards the end of the quarter, the prospect of a US government shutdown. And then top of all that, just the speed of the gold price rise itself. We heard a lot about investor FOMO. Seeing the speed of the price rise just became an added reason for them to invest. And we should also give a nod to central banks. They're still buying at a really healthy rate, been a key element of demand for the past 3 years, and that remained the case in Q3.
And on the point on investment demand, what we saw was quite broad, wasn't it? If you looked at gold ETFs, bars and coins, it was quite healthy across the board.
Yeah, exactly. Investors were quite kind of product agnostic. We saw global gold ETFs have had really strong inflows for the whole of this year so far, really. Bar and coin investment has just seen its strongest quarterly run for nearly 15 years. And we're still talking about, the heightened levels of interest among high net worth and institutional investors. I think really it just highlights that, that fundamental strategic case for owning gold is still very much at the front and centre. Not just its safe haven role, which remains very relevant given the levels of uncertainty we've got about developments that are playing out on the global stage, but also increasingly its role as a portfolio diversifier. We've seen market analysts and financial market commentators more and more highlighting this ability that it has to diversify a portfolio. That's so relevant, particularly at times when US stock markets in particular just going up and up and up. You've got investors wanting to make the most of that rise in stocks, but at the same time increasingly looking to products like gold to insure against any potential corrections.
And going back to your earlier point on central banks, that's a trend that we've been talking about in earnest for the last 3 years or so. Did we see a continuation of that in Q3?
We did, yes. They're still buying at a really healthy rate. Year to date, they're at around 630 odd tonnes. And if you compare that with the average kind of Q1 to Q3 of the last 3 years, we're a little bit below. We're about 15% down or something. But going back further, before 2022, that would be a really healthy full year total for central bank buying. So they're still, making a significant contribution to annual global gold demand. And what we're also seeing is a few new faces, or a few kind of faces that haven't really been buying a lot recently kind of reappearing. So Brazil, for example, in Q3 came back after quite a long hiatus. We know from our central bank surveys that they're still looking at gold in terms of its performance in times of crisis, its role as a diversifier and risk hedge, and its lack of default risk. So when you look at all that, we think it's the case for them to keep buying is really still very strong.
And so while the price was obviously a very important factor in supporting investment demand, it was slightly a different picture when you look at the more price-sensitive areas of the market, such as jewellery.
Yes, exactly. When the price is going up sort of so quickly like that, we absolutely anticipate that's going to be reflected in lower gold jewellery volumes, which is what we saw in Q3. If the price of an ounce of gold goes up so much faster than all else equal, customers are going to be able to afford to buy less of it. But what we see on the flip side is that the value of gold demand for jewellery keeps going up. So although customers might be buying less in sort of pure weight terms, they're actually spending more when they're buying it.
And we always talk about some of the key markets such as India or China. How did the quarter look for them?
Yeah, India and China are the two big dogs. They still were for Q3. They are very much kind of the largest markets for gold jewellery, but it was weak. Again, we just saw that affordability constraints come in. Consumers were buying kind of lower weight, lighter weight items with less gold content. And in India also, we noticed a bit of a shift away from gold jewellery at some sort of occasion, festive related buying towards gold investment products. And I think really that's reflective of people just wanting to get the most gold for their money, the markups on investment necessarily being a lot lower than those on jewellery, which involve a lot more craftsmanship.
One of the key trends we saw in India was actually people using their gold to obtain gold loans. So using that increased value in order to make the gold work for them in a more practical way. Can you tell us more?
Yes, exactly. Yeah, that's been a trend we've noticed really so far this year that's been growing. Exactly as you say, customers wanting to make the most of the rising value of their gold jewellery and pledging it as collateral for loans. Now, typically, we might have expected to see that gold making its way back to the market, being sold back, recycled, but instead they're tending to use it in this more productive way. And similarly, we're also seeing a much higher than average levels of kind of gold jewellery exchange, where people trade in the value of an existing piece of gold jewellery when they're buying a new one.
And looking at technology, a relatively small part of the market in terms of volume, but throws up often a lot of interesting stories. What happened in the quarter there? Yeah,
technology, it's kind of the minnow in terms of volume, but fascinating, I think, in terms of the stories it sort of tells. When you look at the range of applications, it's not just consumer electronics, it's everything from kind of space travel to horticultural lighting to medical diagnostics. So I find it really interesting. Demand in that sector was quite a little bit weaker in Q3. That's really reflective of manufacturers of consumer electronics and, in fact, companies kind of along that supply chain finding it difficult to sort of assess the impact of global tariffs. And that kind of makes their inventory management a bit tricky, and it's just reflected in sort of slightly lower volumes of gold usage in Q3. But then there's still the tailwinds to gold demand in technology of kind of increasing rollout of AI infrastructure.
Lou, thank you very much for all the insights. If you'd like to read our Gold Demand Trends report or any of our research and data, please visit us at goldhub.com.